China's gross domestic product grew at its slowest pace in 18 months in the fourth quarter as the government deals with its greatest economic challenge since the beginning of the pandemic. The economy expanded 4% year on year, better than expected, but it fell short of the 6.5% growth in the same period last year. Meanwhile, the People's Bank of China also cut a vital lending rate for the first time since April 2020, the latest in a series of easing measures over recent months that have coincided with a property slowdown and pandemic restrictions. For all of 2021, the economy grew 8.1%, which is less than expected. Industrial production, though, rose steadily through the end of the year, but retail sales missed expectations. Now, for more on this, let's go to Han Tan, Xinity Group Chief Market Analyst. Han, many thanks for being with us today. First of all, do you think this is a sign of a loss of momentum for the Chinese economy? And I'm asking this because data really are pointing in different directions. Can you drive us through these data? What's happening?
Yeah, broadly speaking, there is this slowdown as widely expected, right? And from today's numbers, if you look at the lower than expected retail sales numbers, that's really in line with the zero COVID policy that policymakers are adhering to. And of course, we note the downside risks stemming from the property sector. And I think what's really telling from today, it wasn't so much the backward-looking data, but it was the moves that you mentioned by the central bank, right? So it shows that some supportive measures are in need for the Chinese economy moving forward, given those downside risks that I mentioned earlier.
Okay, interesting. And as you pointed out, there's a triple pressure now. So zero COVID policy, but also an energy crisis that the country is grappling with, and obviously a property sector crisis. On this last point, do you expect policymakers to take further action at this point? What's needed?
Yeah, I think it's, be it the energy considerations or the property sector considerations. Look, I think we have been seeing this battle between short-term considerations versus longer-term considerations, right? So for energy, for example, we do expect some supply-side interventions by Beijing, as they have been in recent months, such as releasing strategic reserves or even some quota mandates being placed on producers. But at the same time, not fully loosening the supply taps, so to speak, right? So in keeping with its green agenda. So we expect these tighter market conditions to persist in light of these shorter versus longer term considerations.
Han Tan, thanks for this analysis, much appreciated.